memory where these traders are wanting to see that continue to be the case. Same thing can be said from a resistance standpoint. Say if you had seen, again, it's hard to see these. I think it's about $60 on the chart. Say if you had seen it hit $60 twice here and then fall all the way down below what seems to be $50, and you're thinking, man, I am really kicking myself for not having sold it when it was at 60. I've now seen this go down $10, $20 against me. If it ever gets back up to 60, I'm going to be willing to sell. I felt good when it was at 60 and no longer feels good at 50. I'm willing to sell it at 60. That creates that additional component of supply, additional component of sellers at this level on the chart in particular. And that's also what creates the parity of the market in that case, resistance becoming support. Now, why is that the case? Again, we have to think about it as a psychological component of the market. In the event that, imagine you have been that person consistently selling at 60, thinking that that was going to be the top each and every time. Or in this case, this looks a lot like that prior resistance area where, say, you bought it at, in this case, we can see it a little bit better, about $18, $19 per share. It got up to 25. 25 again, then all the way back down to 15. When it got back to 25, the sellers may have been like, I am willing to close this at 25. I've seen this go decently against me a couple of times now. When it gets to 25, I'm exiting this trade. Maybe even I'm going short because I've seen this play out times. And then what happens? We break above that. There's enough demand to be found where the next time it gets to 25, maybe you've now seen it go past 25 up to roughly $30 per share. And now you're saying, well, hey, if it gets back to 25, I'm willing to buy it. That prior area has an important component. Or the other side of it as well is the fear component. Imagine you had seen this play out a couple of times and you decided to enter a short position at 25 this next time, and it rallies all the way up to $30 only to come right back down to your cost basis. Do you start reevaluating a position? Have you ever been in a scenario like that where you were on the wrong side of the trade, it gets back to your cost basis, and you're thinking, if I could just break even on this trade, I'm willing to get out of this position. I don't need to make money. I'm willing to break even. That is a component of that prior resistance coming support. Prior short sellers now have a offsides position that when it got back to their break-even price, they're willing to exit and close that position, becoming buyers, flipping that prior supply into demand. Similar component of when support becomes resistance. As you would imagine, I'm sure maybe more people are akin to this style and this way that it has affected them in the past, me included. Buying at $20, seeing it go up to 28 a few times. Maybe this last time you're thinking, all right, well, it's gone from 20 to 28 3 separate times now. I'm going to be part of it this time. I'm going to buy it at $20. And this time we went swiftly all the way down to $3 per share. That's a rough trade. And I'm sure there's plenty of reasons that you could have gotten out of it sooner, but that is sometimes the nature that I know we all have. I tend to call it myself the Yosemite Sam strategy, where, you know, if we remember back in Looney Tunes day, Bugs Bunny would tell Yosemite Sam to not cross this line. When he did, he would just draw a new line, tell him not to cross that one over and over. And then all of a sudden, Yosemite Sam falls off a cliff. That is what we want to avoid as traders. We are trying to find areas of discipline that we can take position off if they are not working in our favor. But nonetheless, had we held it from $20 to $3 and back to $20, are you excited to potentially be able to sell this at a net even cost basis? Imagine if you saw a position lose 17 out of $20 was at 85%, and then get back to a 0% loss. In that event, are you willing to sell it? And that is a component, again, of prior support becoming resistance. And that's also the nature of the market from time to time. The market we tend to talk to as if it is a constantly trending mechanism. And unfortunately, that's not always the case. Sometimes the market is naturally range bound. There is a balance being found, what we call equilibrium between buyers and sellers. But even within that, there can be profit within a range bound market. You can kind of see here $38 to $42. That's about 5 to 10% range on a regular basis. If you could regularly buy the top and you maybe even turn around and short the top, you could be collecting a decent trade along the way as one. If someone was just simply long this position, maybe didn't make any money comparatively, or they only made that first move. So there is that component of being range bound and being able to be profitable from the range bound component. But again, risk management is the key to that. If we break that range bound market, do we start entering into a scenario where that prior support becomes resistance or that prior resistance becomes support? Now, I mentioned earlier that it doesn't have to be horizontal in the sense that support and resistance is really just the concept, the theoretical abstract of an area that we anticipate there to be more buyers than sellers, more demand than supply, or vice versa. So a trend line, a diagonal, and even a moving average, they can also be supportive in the sense that this is the area that the trend is holding on to. Someone who has maybe held on to this position, maybe they drew this trend line and are using that as a concept of risk management. Maybe it's a moving average. If you're thinking, hey, I have a 50-day moving average on my chart, as long as we remain above that, I'm willing to be long this position. If it gets below that, I'm wanting to close it. That's the same sort of concept, is acting as a concept of support along the way, or a concept of resistance. In those distribution phases, we can see how that can be an important component of the market itself. So just to show a couple of examples of a few of these things that we've seen over the past few years on a range bound component, I don't think there's a better example out there from a textbook perspective than the Russell. If we go back to 2021, there was a period in this time frame. In fact, if we zoom in to just simply this time frame in particular, of pure range bound action. Now, in this range bound, 2100 to call it 2350, that's 200, 250 points of movement. There's a 10% range that we were working within. And had you been a trader buying the bottom of that, selling the top, or shorting the top, buying to cover, that could have been a very still profitable trade for, in this case, essentially a year's worth of time. But had you simply been someone waiting to see a breakout of that, well, the first thing that we did, we broke out to the upside and weren't able to sustain that to the upside. In fact, getting from that 2300 up to about 2450 before re-entering that prior range. And what was the unfortunate side of that? Well, imagine if you were someone staying out of Russell entirely until we got above 2350 with continuation. Then we got that in 1 week's time and then found ourselves back within that range. Well, the unfortunate component of that is that had you been someone doing that, your bullish thesis kind of became invalidated on the re-entry into this range. And kind of in that case, it would make sense to close the position on top of people who are already closing these positions at 2350 or so, pushing us to the downside. And again, what happened when we broke out of that due to the new kind of supply distribution? Prior level of support became an area of resistance in April of 2022. We then moved down further. And what did we do in the Russell? Well, we created a new sideways market. Now, instead of 2100 to 2350, you have 1600 to 2000, and even broader range, arguably. It's maybe seeing a little bit of a breakout now, but funny enough, if we extend this to the right, where did this most recent rally fail? The exact same level, that prior level of support becoming a concept of resistance, at least for this moment in time. Now, granted, can that change? And that's the important nature of looking for those opportunities, is making sure that if we're on the wrong side of the trade, we have a component of risk management. And on the other side, we mentioned this on a trend line perspective. Actually, let me get rid of this one. I was looking at this earlier. Let me add a just blank chart for us on the S&P 500. If we look back to what the last few years look like, well, coming out of 2020, a simple trend line was really the kind of tail of the tape, that it was an important supportive level from a diagonal perspective until we started seeing distribution. And again, what happened there? Finding resistance along the way until we broke out of that, turned that into support. And from there, we have been able to at least hold that area of support for a bit of time, continuing to see that to the upside, even on a moving average perspective, something a little bit more dynamic in its approach of support and resistance. That 20-week moving average was a large component of this uptrend, was also then the 50-week acting as a concept of resistance. And then most recently, that 20-week, a concept of support this time around. So always a variety of different granularity and timeframes that people are looking at, but we're looking for inflection points in the market. Where at this juncture does it make sense from a support and resistance standpoint? In fact, for most of this shorter term component, this rally, the 20-day moving average was that acting concept of support, until it recently turned into resistance. And now seeing a breakout of that. Does that continue? We'll, unfortunately have to wait and see. No, I've been going for a handful of minutes. So anything you wanted to add here, Chase, or anything you wanted to take a look at next?
Yeah, Andrew, that's fantastic. Really great definition of support and resistance. What I wanted to just supplement with what you were showing in terms of the slides, we do have an article on Fidelity.com that I think is pretty useful. It's quite simple, but it has some pictures I think that can add to what you were showing Andrew earlier in the slides. You can just search for support and resistance on our website up in the top right hand corner right here, folks. Just search support and resistance, and if you filter by article, you'll find this here. And just to supplement what you're saying, Andrew, support, we typically will identify as being at the bottom or underneath price as a pivot point where it was low, then bounced higher. Resistance being the opposite. And I think a lot of clients often get confused like, well, how could former support be resistance? What we mean is through time. So at one point, it may have been resistance in the past. And as we move forward through time, that same level becomes support potentially, or vice versa, right? The relationship can flip. It's not that in real time it is support, then it is resistance. We mean as new information comes through, as more price action develops, a prior resistance, or it could be prior support, could be flipped into just the opposite down the road. Again, the way I would word this is it's an area of interest for the marketplace. Does that interest support bullish traders or does it support bearish traders? Depends on the price activity after that. Andrew, I do want to add a few other things here moving forward in terms of the application portion of this conversation. So let's hop back into ActiveTrader Pro for a moment. I had a chart pulled up. I was just mocking up for NVIDIA, for example, just demonstrating the same thing that that article had, which was just a really easy way to visualize former resistance becoming support. And if I just zoom in a little bit further into this movement here, we can see that we tried to move higher into the former resistance. We failed again. Then we had the stair step higher, had a little bit of chop, broke above it. And then this is what's very, very common when it comes to some of these, what we refer to as breakouts, which is we get a breakout and we come back to retest that level. This is the market saying, yay, we won. Or did we? Let's find out. Right. And then so they digest the information, the news, whether it's fundamental, technical in nature. And then this is that area where if you're a bull, for example, we're looking to see, does this level now hold? Yes, once it broke through. Now we're retracing. Is it strong enough? Did the bulls really win the battle? In this case, obviously we bounced up. We know the story with NVIDIA. Since then, we've moved significantly higher. But what I wanted to show here, and we'll hop back into a generic symbol like Apple, for example. These are all for demonstrative purposes. What I wanted to show, Andrew, is for a lot of clients, they might be brand new to support and resistance and technical indicators, right? This is a beginner session. You may not feel comfortable drawing your own support and resistance. Maybe you just don't know what levels to trust or how to easily identify it. Andrew looks at charts all day long, so do I. It's pretty easy for us to maybe take a look at the chart and say, yeah, that's good enough. So is there a way that we can help? Yes. So on your chart in ActiveTrader Pro, we have similar functionalities on Fidelity.com as well. If you click this technical analysis tab, you get a drop down and there's a section for support and resistance. I hope everyone at home sees that support and resistance. Now, if we click on this, what's going to happen is there's a third-party technical analytics firm called Recognia, and they have their own proprietary methodology to look at stock prices on a specific security, and they will then suggest or draw uh, an interpretation of support and resistance. They plot it on your chart. The bottom, in this case, blue, is your support, and the top end, green, is resistance. Now, if you have any questions on this in general, I always encourage clients, if you're on a tool within ActiveTrader Pro, if you go to the header, this blank space on the chart, and we right click and hit help, we'll get a pop-up article that will appear. And once that loads on your screen, if you scroll down, there's going to be a section for support and resistance. What's nice about it, it talks a little bit about the methodology. Of course, it's proprietary to Recognia, so they're not going to go ahead and give away their special sauce. But what's important to recognize is these lines are calculated on a daily basis using the security's prior close. So this won't be effective on an intraday basis. That's not what this tool is designed or developed for. Although, of course, you can do your own intraday shorter term analysis manually. This tool is to support you on a daily frequency through time. Okay, let's say we change the time frame a little bit, right? We're looking at a 1 year uh, price action of Apple. Can we manipulate this tool at all if we need to? Yes. If we left click on either the resistance or the support, we'll get a pop-up that then says modify, or we could delete it if we want to remove it from our screen. But for now, we'll click modify. From here, Andrew, we have a choice. We can have the system input data on a more short-term basis, an intermediate term basis, or longer term basis. And based on this input, this may certainly change the output of the line that are drawn for both a support and resistance level. So whenever you pull up a chart, you add this feature, there's been times where I look at it and I say, I don't agree with that in any way. That looks totally wrong to me. But it's just an algorithm, it's just a process. It's using data inputs. You may have to change the time frame for it to be more right sized to maybe your own expectations, but also the time frame that you're looking to trade, for example. Now, we often get the question, what does that short term, intermediate term, and long term really mean? The clearest definition I can give here is if we go to the patterns and events dropdown from technical analysis, and Recogni is referring to the trading time horizon as short term being 2 to 6 weeks, intermediate is 6 to 9, and then long term is more than 9 months. So just as a loose definition and interpretation of what those timeframes might mean. So if you're someone who's brand new to technical analysis, you've heard what Andrew said about what support and resistance is. This is going to be a tool that you can use on a variety of symbols. Again, I didn't see any that came through the question and answer. If people have other symbols, they can definitely put them in there. But you can plug in whatever symbol you're curious on, and as long as Recogni has data for it, the chart will plot that. To give you not only a sense of confidence, but something to look at as a starting point. Say, hey, does this make sense for Apple? And looking at this chart from a support perspective, it absolutely makes sense, right? Former resistance, flip-flopping into 2 key main pivot points, 3, a little bit of chop, a intermediate to a shorter term false breakdown that came back through. So does this make sense? Yeah, it probably does, right? Depending on the time frame that we're looking at. Like, is it completely out of left field? Then we look at the resistance. Could this have been drawn higher? Maybe, yeah, if you want to take the absolute pivot point, highs in this case on an intermediate term basis. But does it get a good enough line for us? Maybe. So you can look at this as inspiration or a starting point in your technical analysis journey. Christine threw in a symbol, so Tesla, let's switch to that. And Scott also had one too. So let's see if it does anything for us on Tesla. So we'll go technical analysis, we'll add support and resistance. I'm on a 2-year time frame, daily frequency, and this is what it has for us. So Christine, you can see here, if I left click, hit modify, here's the short-term version. Notice how much more it narrows the band. Intermediate term, a little bit wider. Longer term actually lifts up the support. So interesting. You have 3 different results. The support is in a similar-ish position for all of them. However, the biggest difference from my eye is the short term, that resistance tightens up significantly. So that's what Tesla might look like here for you with that tool. We'll switch symbols one more time for Scott, PLTR. That's totally fine here. Palantir. So technical analysis, again, we have this set to the default of intermediate. If we switch to short term, what does that look like? Nothing changes. Okay, so according to their algorithm, nothing significant there. Longer term, okay, here we go. So on a longer term basis, that support drops significantly because of the historical price it's using into its system. Would it be useful, Andrew, to have this as our support from a risk management perspective? Probably not, right? Because look how far away that is relative to price. That's like a 60% drawdown. So even if you're a longer term trader and you say, hey, this is the long term support identified by them, you still may want to use a shorter term time frame as an example to have a tighter sense of risk management, so you're not allowing for such a wide deviation of price action to occur. I've got just one more point to make here, Andrew, on some of these concepts, and I'll pass it back over to you when it comes to support and resistance. The other reason I think it's important to cover this, one of our classes that we go through as part of our 4-week technical analysis class is patterns, right? By raise of hands, who's heard of a chart pattern or a technical analysis pattern, such as a double top, double bottom, whatever it might be, but you've heard of the concept of chart patterns in general, right? Let me know in the Q&A if there's any that are specifically stand out to you. The reason I mention this is most of these patterns over here in the multi-bar are some kind of breakout from support or resistance, right? If I scroll through here pretty quickly, here's a double top. What do we have? Support, resistance. We come into the zone, we trade a bunch, we come out. Okay, here's a double bottom. It's the same thing, but inverse direction. Here's a triple top. Here's a triple bottom. So my point is that it's important to recognize some of this horizontal support and resistance, and of course the diagonal in terms of trend lines, simple moving averages. But the reason we're covering it, not only just to understand that support, resistance, that equilibrium that Andrew had mentioned of supply and demand, but if you're also someone who uses patterns, then you probably need to understand this concept, because patterns mostly are based on breakouts from and trading within some kind of support and resistance regime. So just be mindful of that. There is a larger reason at play that we cover this content as well. And that's even evidenced in the ATP tool. If we go back to the technical analysis dropdown, not only is there support and resistance that you can have Recognia draw for you, you can even go to patterns and events and have them search over all the different classic patterns for intermediate and longer term and short term periods on a specific stock, which again may be a breakout from support and resistance depending on the pattern. For example, here's a head and shoulders top. If I hover over this icon, I click add to chart, it's actually going to draw that for us. So just interesting to note, didn't want to get too far into the weeds there, Andrew, but just I thought that was good to know. If you're a newer trader, you don't feel confident in drawing a pattern, but you understand the basics of support and resistance, we have a tool that will help with it. If you don't even know where to draw support and resistance, we have a tool that will help with it. But back to you for any questions, anything else you want to add. These half-hour sessions fly by, so doing our very best here to keep on time.
Hey, absolutely. A lot of great information, plenty of things that we could take away. And like I mentioned, these are great, very abstract concepts of support and resistance, the components of, where we anticipate supply and demand to be found. In fact, I saw a good question that came in, I believe from Ginny. Should you buy at support and sell at resistance? Well, it's not necessarily as easy as that, unfortunately. Of course, it would be natural and nice if it was. The more kind of to the tune of what we're saying is that this is an area that the market and kind of traders are effectively anticipating there to be either demand to be found at support and that to overwhelm supply, but it all comes down to really seeing what the reaction is. Say if you are someone buying at support, well, the main thing that we would want to be concerned of is what if support breaks? That is the main thing we're trying to determine. Are we also then maybe adding some component of other types of analysis to think that, hey, if we get there, I think that there will be a more kind of buying component found in the marketplace. In fact, that's the nature of kind of that, what I was referring to earlier, at resistance at 50 and support at 40, and we are wanting to buy that $40 support. Well, if it breaks 40, we can plan to exit that trade, and we can say create a stop loss somewhere. Say if we did again, like in that prior example, $38. Well, now we know we are risking $2 per share for the trade to get back to $50, $10 of reward. It doesn't mean that the probabilities maybe are different in that respect, but it does mean that the worst case scenario, hopefully for us, is that $2 stop loss. There's plenty of things to be concerned of, gapping wise and things to that extent. But when we're creating a trading thesis, that's what we're looking for versus the reward. Is that 2 to 10, 5 to 1 relationship worth it based off of what we anticipate to have happen? Again, reactive is the component of technical analysis. And then a great question too that came in from Cindy. Can you access this on Fidelity and not just Active Trader Pro? Yes, this is built into the Chart Plus capabilities on fidelity.com as well. Of course, we tend to, I don't want to say you have to use Active Trader Pro to be a active trader by any means, but just my personal experience, I would find most of fidelity.com is harder from the component of active trading. Maybe if you place one trade on the daily perspective, and there's not a big difference in your mind of a small amount of percentage change during that activity of placing the trade. But if you are going to be actively trading, Active Trader Pro is probably the best for that. Chart Plus is the bridge between Fidelity.com and Active Trader Pro, or Trading Dashboard for that matter, has the streaming capabilities and the ability to place trades. So Trading Dashboard, definitely something that is useful in that respect. On that note, I would mention, I believe I'll be back in a session next week on the Trading Dashboard, going into that with a little bit more specificity. So I'll double check that that is the case. But yes, that is going to be actually maybe a couple weeks out, but I'm doing a Trading Dashboard class on the 22nd at 10:30. I'll be back taking a look at that new tool available for us. And then last question I saw that came in from Terrell earlier in the session: what timeline is the best for buying? I never like to give an answer like this, but it really just depends. There's no correct answer of when is the best thing to be doing, because everyone's different. Everyone's going to have different time frames that they trade with. Some traders that it is entirely foreign for them to place any trades underneath a 10-20 year time frame. They are holding for the long term. So everyone's different. There's not a correct time frame of that. I would say that the only correct versus incorrect, make sure your time frame matches your outlook, in the sense that if you think something is going to happen in the next coming weeks, basing it off of a 40-year time horizon might not mesh the best, but understanding what your risk and reward is and what your risk tolerance is going to be the important component there. No, we're already right at time. Anything you wanted to add before we wrap up, Chase?
Last thing, Andrew, a different way to answer that question. Yeah. Is there a best time? That's difficult depending on the trader. What I would say though is, if someone's to ask, am I using the concepts of support and resistance correctly? The general rule and the more baseline approach to technical analysis of support and resistance is that breakouts are important. Can you trade within the ranges? Yes, you can. You need a very stringent system. You have to be aware of risk and turnover and chop within your account. But if you were to pick up a technical analysis 101 book, right, or we were to condense it like Andrew did in the very beginning, when would a trader look to enter a trade or maybe close a trade they were already in based upon support and resistance? The general answer is some kind of breakout. Is that always the case? No. But again, as a general answer, that's not really a timing thing necessarily, except for when it breaks out potentially. Now, is the breakout on a daily or a weekly candle? That's a different story, right? That comes back to what Andrew was just saying, if you're a weekly trader versus daily. As an example, though, if you're an NVIDIA trader way back when here, you could take a look and say, hey, I'm not sure when I want to get out, but if I get a breakout that's significant up and above this resistance, that might be enough confidence for me, in addition to the rest of my trading system, such as using a trend analysis like a simple moving average, maybe add momentum, whatever it could be, to then place the trade. But maybe I'm going to wait to get that breakout to get the additional level of confidence, right? So if you're not sure where to start, the general concept of support and resistance is that those breakouts might be very, very important to you as a trader. Does it break out on daily, weekly, or monthly candlesticks, though? That's up to you for sure. And then my last thought here, Andrew, is every time we share a new shiny toy of a concept within technical analysis, I try to remind traders, don't miss the forest for the trees. Yes, this is an important concept, but what's the most important if we had to order them or give them a priority within technical analysis? Andrew, you know this from studying the CMT content, it's trend, right? Trend is your friend. That's the first and foremost. Don't miss the forest for the trees. Remember to have some kind of way to identify trend. If it's a trend line, cool. If it's a moving average, exponential moving average, whatever it might be. Maybe have some momentum in there. That's fine too. But don't let this new concept just suddenly throw everything out the window. You want to add this and supplement your existing process if you have one. If you don't, you want to make sure you've got that fundamental pillar of trend analysis first and foremost. Then you can supplement it with stuff like this, support and resistance, whatever it might be, patterns, momentum, etc. So keep that in mind when it comes to a holistic trading system. And then lastly here, Andrew, I'll just pop up the calendar that you do such a great job of compiling for our clients. So we definitely appreciate it. We look forward to seeing everybody in whatever session you're able to attend next. So if it's going to be an afternoon market briefing here today, fantastic. If we have to see it tomorrow, well, we look forward to it. Until then, take care. Andrew, as always, good to see you. Take care.
Likewise. Take care, everyone.